Okay, so what you have here, all right, so this is the S&P chart. I know there's a lot going on, but bear with me. The purple line up here is just the advanced decline line, okay? That's it. All right, we got advances and decliners over here. I keep a 10-day advanced decline line up and a 30-day advanced decline line up. Shout out to Helene Meisler of the street. I got that from her. She's awesome. And then on the bottom is the McClellan oscillator. Okay. So again, nothing too crazy here. I mean, you know, the 30-day AD line for NYSE, right? Which I'm showing S&P here, but it's the NYSE 30-day AD line is down to its lowest level since close to the lows back in 2020. And the 10-day just got down there too. But look at the Nasdaq 80 line, right? Look where we are. We're like in like crash territory, or like when the market has crashed. So what I did was before this, and again, we got to see what happens today because these stats could change, like completely reverse or, you know, exacerbate. We'll see after today because we have Fed, right? So we need to look at this after the day's over. I can't really stress that enough. It's like looking at an oscillator, like a price oscillator. It only knows the closing price. Don't look at it in the middle of the day. That said, I'm looking at it right now. Okay, so for argument's sake, let's just say that we do close similar to where we are right now. Your 30-day AD line is minus 633 right now. Okay. When have we seen levels like that before? So here's the magenta dots. They show when you've had levels of 600 or minus 600 or less, right? Well, we got that in March 2020, right? That's when the world was ending and civilization would cease to exist because of COVID-19. But yet here we are, still here. Okay, and then we also had that, this was December of 2018. That was like that Christmas crash deal, right? I think that was actually Christmas Eve. We hit similar levels then. Okay, so here's where it gets interesting. All right, so those two instances obviously were V bottoms and the best buying opportunities of the last couple of years. Scroll all the way back. We hadn't had any readings like this since the financial crisis. It's kind of wild, right? So October 2008, that's last time we had them. Obviously, that was not a V bottom. We still had extremes volatility, both ups and downs to go through. And, you know, eventually, I mean, I guess you could say it was a very long-term buying opportunity. In fact, this area, this is October. I have my vertical cursor here up on the week of 10/27/08. That was actually the low for a lot of markets around the world. A lot of, you know, carry trade stuff and, you know, I think EM, you know, other countries and a lot of commodities. So you could say that, you know, right now, based, this is the weird part, based on right now in this, you know, AD line, that you could say tech is like at panic lows, and it's really weird to say because we're like a couple % off the highs, I think, in the indices. Okay, the only other time we've seen this AD line like this was actually during the tech bubble burst and subsequent downtrend. So you can see they did tend to happen at lows. You got a bunch of clusters of these readings at lows, okay? And then you'd bounce and what have you and continue lower. So bottom line, all I can say is that, again, the day's not over, but all I can say is that breadth is at a point where you tend to see the market, and this is, again, Nasdaq, you tend to see it occur near lows. The weird thing to me in this situation is that it's happening with like this tiny, tiny dip. right? That's just a function, again, of the indices being dominated by several names, right? Like I think the average stock in the Nasdaq is down like 40% or something, where, you know, we've barely come off the highs here in the composite. All right, so I wanted to point that out. Bring that up later. What else did I want to show you? Oh yeah. Okay. So on that, let's give me some here's some levels to pay attention to when it comes to. We'll look at Nasdaq futures. Okay. So you know how I talk about, sometimes I talk about daily reversal, resistance, support, and all that stuff. Remember, I say draw on the close. So if you did that here, here's the close of the low day. Almost hit yesterday. I'm not going to put a whole lot of stock into that one. Close the high day was resistance. This channel, by the way, remains just, I mean, what a beaut. Both channels. Channel here, internal channel. So levels that I'd pay attention to on futures. Again, just total price-based channel stuff here, not worrying about the breadth situation. So look at this one. Kind of the middle of nowhere. Call it 15,420 or something like that. The real problem doesn't really start in this until you break this channel here, the one from March. Okay, then you'd be looking at something much bigger down towards here, but S&P near-term levels are actually a little cleaner for me. So this is the low day, and the close there is 45.34. So I would pay attention to 45.34. Okay, 45.34 might occur with the Nasdaq breaking two lows where the S&P has not yet done that, and you might get a decent bounce out of that. That's where my head's at. Okay, especially with the breadth that we just looked at. Now, bigger picture, I mean, I don't know, man. I know I just pointed out that extreme breadth stuff, and maybe it needs to be relieved with a violent rally or something for a couple of days. I don't know, but on a longer term basis, I mean, that looks like pretty good resistance to me, doesn't it? This is the S&P, and you're looking at, this is just a line drawn off of that April 2010 and highs here. I mean, just it crosses like every single high since the 2009 low. Okay. And just looking at it this way, let's do this. Every single time we've hit this level, we've eventually had close to a 20% drop. Now, maybe not right away, like you can ride it for a while. And I'm not saying that doesn't happen. It could very well happen. But eventually, you tend to get a pretty good pullback. All right. So here you go. 17%, 22%, 15%. And so far, we've had a drop of 5%. So if we were to get something on the order of, let's just say 15% or 20%. 20% takes you down to this line, 3780. 15% takes you to 4,000. I don't know. All I'm saying is this looks like pretty solid resistance to me. It's a line to pay attention to. All right.